listening to the Non-Del Influencers podcast, brought to you by First Funding. Join host Matt Coles as he delivers powerful conversations to help non-delegated lenders succeed and scale in today's market.
Good afternoon, everyone. Matt Coles, National Sales Manager with First Funding. Thank you for taking the time to watch this latest episode of Non-Del Influencers podcast. Very appreciative of the time today that Scott Geisel, Director of Compliance with Strategic Compliance Partners, is going to spend with us talking about some really hot topics in our industry and about the transition of moving from broker to banker. Scott, thanks for taking the time to join us.
Matt, great to see you.
Always good to see you. You know, I became aware of your organization through trade shows, and we were just talking pre-recording here that you're going to be joining a panel at the Originator Connect coming up here in August.
Correct. We're headed out to Las Vegas, and we're going to spend a few days there with brokers. It's called Build a Broker, which is Originator Connect, and the idea there is to get in front of brokers that are looking at hanging their own shingle, getting in business for themselves. What's that look like? What support vendors are available to them? We always get together with key industry leaders, present to our broker base, and the topics we cover are great on stage as well as one-on-ones when we get to meet everybody face to face.
Yeah, I think you guys provide such a valuable service. Typically what I've seen, and I've been doing this for almost 25 years now, and I always saw originators, right? They're hunters, right? They like to originate loans, and they want to, at some point, they want to break out and go do their own thing. But sometimes compliance might be 8th, 9th, or 15th thing on the list that they think about, and they don't always put pen to paper on what that looks like. And I love the value that you guys are bringing to that side of it, to really kind of just say, listen, we've done this, we've built this box. If you just follow our checklist, for lack of a better term, you're going to be in a great place. So it's a really awesome service that you guys provide.
Thank you. I do. Probably one of the key parts I like about this is the entrepreneurial spirit of our client base. They are, like you mentioned, they are first originators. They're born salespeople. These are people. They've made a great living in a niche market by being extroverted personalities, delivering ultimate awesome service. But at the same time, when they make that big decision to leave that umbrella of their employer, of the larger broker or lender or retail shop that they've worked under and built a brand under, when they want to start their own business, there are some considerations. That pen to paper you're talking about, that you want to be aware of: your reporting, your licensing, your compliance requirements, just your business running things and systems you should have in place. And I like getting together, not always providing a legal analysis or a policy or procedure. I like just talking to the person as a business owner.
Yeah, well, Ginger Bell and I have hosted a business planning course throughout 2025. I think we did like 6 or 7 modules, starting out with who do you want to be as a business? What's your brand? Who's your customer? Kind of building it all out. And I think it's been a really great eye-opening opportunity for a lot of people who are trying to think about maybe starting their own shop. And part of it comes into, all right, well, what does it look like, right? Not everyone's growth plan is the same. And we were talking pre-recording again, like license growth. Right. So from my seat, a lot of the people that we see, they want to move from broker to banker because they want to add more state licenses. It gets them a little bit more flexibility, recruiting purposes. There's a million reasons why we've beaten it down to the ground about why people move from broker to banker. But one of the main reasons is state license, right? They want to grow their state licenses. And you said something before where you're like, okay, well, if you want to add 25 new licenses in the next 3 months, what does that look like a year from now, right? What does that look like for you? And how do you talk to your clients about that?
Well, I like to look beyond the initial idea, right? Because SCB, of course, can provide the services through our MLS licensing division. We can help you with the checklist, the requirements, putting your policies, procedures, your business plans, and everything that's required at the state level to get a license. But beyond having a license there, you have to understand why you're in that state and how you got there. And then what's it look like doing business in that state? The way you got there is you have a business plan to grow your business, and likely one of the LOs you recruited or a branch came with a requirement of, I'm licensed in these states. So the company then in turn has to become licensed in those states. Growth is sometimes dictated by the people you onboard, your growth, your acquisitions and such. And if you do that quick, or you bring on that great branch that you've always coveted and wanted to get, it comes with the requirement of you need 13 new states. 13 new states, we can pull it off. There's a certain timeline and management skill set that's required of licensing and collaboration, but it's going to be down the road, your reporting requirements, your renewals, and what I call your audit horizon. What
Yeah.
you've done is you've established a precedence that in 24 months, 18 months, or 12 months in some states, you're going to get audited in those states based on your licensing date. So you can imagine, right? 24 in a year is 2 a month that you're going to have. That's okay. Understand that we're in the big leagues now, right? You're a non-del correspondent lender licensed in 30, 40 states. But you're going to have to own up to some administrative management, not necessarily a full-time compliance person, but you're going to have your ducks in a row as far as who's who, duties defined, who's watching education, who's watching advertising, who's watching HR, who's watching compliance and reporting and things like that.
Yeah, so the headline, I mean, that's a great segue, because I mean, the headlines that I think a lot of people are reading are CFPB's kind of had its teeth taken out from it. So I don't really need to, there's a feeling of like, oh, I don't need to worry about too much, right? Oh, the CFPB is not going to really be enforcing much. They don't have the staff or the budget to be able to do so. But what we're hearing and what I'm seeing in real life is that all that burden is being taken on by the states, and the states are gathering and strengthening their policies and their audits and their procedures, kind of sharpening their rules a little bit, I guess. Is that what you're seeing on your side as well?
That's exactly true. And this is what we predicted, with the CFPB officially now actually coming out and stating they won't be really involved in regulatory oversight and on-hands auditing of the broker, non-del, the smaller lender financial institution channel. We don't want to take that as a hands-off approach. Now we have this runway that's wide open. The states will step up. And what's happening here is the CFPB was a consistent voice that issued opinions, and we could watch and monitor their enforcement activity and know how to gauge what would be expected of everybody else. Now that you've thrown in a mixture of 50 individual states with different regulatory authorities, their licensing agencies, conducting audits, and then all the state specific requirements, now you have to have a little bit of ability to read the tea leaves, understand where the auditors are going. Are they focusing on remote work, information security, cyber, or are they focusing on advertising, deceptive practices, LO comp? What are they focusing on? With the CFPB, we could kind of watch their trends. They evolve slowly, if not over 5 to 10 years, but they would come out with position statements that would give us guidance on what to be aware of and what to be watching for. At one time, they were coming heavily on borrow paid, lender paid comp. They were focused heavily on AML, anti-money laundering, right, with the post 911. So a lot of that you could read. Now the states, it's going to be hard to understand what's going on in Massachusetts, what's going on in New Jersey, what's going on in Texas, right? So that's the challenge right now.
Yeah. So that's one of the things that ends up happening in our industry, and I think it's probably just the way it is in a lot of industries, is something happens and then everyone jumps to the immediacy of, well, this is how it's going to be. And we just saw a little bit of this with, Vantage Score being announced as a new opportunity with the credit score process. And, in my experience on Facebook, I saw people, originators asking, okay, well, what lenders are taking Vantage Score? Like literally like 5 minutes after the announcement was made. And it's kind of like, well, that's not how it works. We had to pencil all this out. One of the things that I think a lot of originators are hearing is that MLO comp is going to change. And I've attended a couple workshops on it, and I think the guidance that I'm hearing is it could change, but we don't know what it's going to change to. We don't know what it's going to look like. Just kind of wondering what you're hearing from all your insight that you get.
Well, there's not so much as far as what is changing officially. Where we see change is in regulatory enforcement on what are they focusing on.
Right.
So you have to understand the rules and regs were written by federal politicians and in place, and then they're enforced through bureaus, one called the Consumer Protection Financial Bureau. So just in its name itself, it's all about consumer protectionism. So
Right.
each state will be the same. They want to protect their constituencies, their citizens of their state first, and that's consumer protectionism. So when you look at a written LO comp rule, it states what it says, and it's very easy to draft compensation agreements based on the reg and the rule. But if you want to pay differently on borrow paid, lender paid, that's a broker thing. What if you come into lender now where a lender has their own pricing? I don't have borrow paid, lender paid. I don't have all the constraints I would normally have as a lender. How do I adjust? It's all about the LO not being incentivized or disincentivized to steer a customer to a product that enriches themselves personally. So
Yeah.
what happens if you want to have the LO as an individual? Then the organization that controls pricing to the consumers, not have LOs pricing themselves individually loans, making concessions and getting paid on that loan's revenue. And that's where you want to be aware, no matter how the rule ends up, you want to look at, is the consumer being harmed in any way by the LOs or the organization's actions? And deceptive practices and consumer fair treatment is going to always be the baseline.
Yeah, and I just, in a broad sense, I just think that there's a lot of people who rush to assume what the answer is going to be and how it's going to look when the dust settles, I guess.
Yeah.
And at the end of the day, nothing's been announced as of yet. Anything that does get announced will probably take, a lot of legislation and or changes or policies or whatever it could be to get it put into place. So it could be a while before we see any end result to anything that's announced via Twitter. Essentially, is what I'm trying to say. Like, just when you see it on Twitter doesn't mean that it goes into place the next day.
It's the beauty of online forums, and what's available to us is information spreads very fast. So
Yeah,
unlike before, we'd have to wait for a bulletin, a release, and then a phase and a roll in. Now it travels quicker, but so does misinformation, right? So we don't
yeah,
want to go too soon, too quick, but I love having the information in the heads up early so we can understand what's going on. Like we spoke about earlier, something will start leaking about trigger leads out there, and you'll start to see state by state by state, but nothing's really happened yet. These are all proposals. They're all out for opinions and back and forth and comment, and they'll be revised and revised. And then if they even get passed, right, House bills aren't necessarily passed yet. So you want to wait till they're signed and then put in effect, and then there's a rollout period. So you
right.
want to be careful with not going too soon. But I think it's great just to always have an ear to the ground and know what's going on out there for sure.
Yeah, absolutely. So, you and I have worked together closely in the past, and the evolution of the non-Del channel really, the way I look at it has really kind of fast forwarded over the last 4 or 5 years. And I just, from your seat where you sit, what are some of the things that when you're talking to people that are thinking about making that move from broker to banker, what are some of the things that you say, hey, that's great. Have you considered this? What are the top two or three top two or three things that come to mind when you're talking about the considerations for moving from broker to banker?
Well, I always like to focus on the pros and the cons. So there's a lot of pros, right? There's a lot of reasoning for them wanting to make this transition. The same reasoning they went from an individual LO to their own broker licensee to have their own business. Now they're also eyeing up this opportunity to be a lender, but I can do this in a series or a stage where I can go as a non-Del, then correspondent. I can have someone actually help me with my funding, help me with my credit decisions, my underwriting, sometimes with my reporting responsibilities, sponsor me with different agencies and get me going, right? So that's some of the upsides. And then all the open flexibility on how you're paid, how you make revenue. You're in the market at risk now, right? As a broker, you're removed a lot from liability, exposure, and indemnity, but now you're in the business. But you have to be aware of that upside. There is some downside, and not downside that it's prohibitive, but cautionary. Be aware that now you are in effect responsible for that loan's funding and being bought off your credit line, right? You're also responsible for its performance long term. There's also some more infrastructure. The business that got you, the systems and the personnel that you have in place that got you through the broker business won't sustain you as you grow your correspondent business. You're going to need more back office. We mentioned earlier they're born salespeople, and they're raw sales teams and acquiring new branches and growing. You have to be very aware that you need to build a foundation underneath of all that so it doesn't come crumbling down back on top of you. So we want to protect what you've built. And it's kind of sometimes a premise we use in our webinar series. Protecting what you built is a good compliance management system, good people around you, people in it for the quality of doing the business right, even when no one's looking, not for the quick buck and to make a lot of money fast and all commission driven. Auditors will notice this when they look at your business model. They'll look at the way you're set up. Do you have compliance people? Or do you have all salespeople?
Well, the compliance side of it, I love to talk about only because it should grow as you grow. And I think sometimes that broker to banker community sets it and forgets it type of thing, right? They set out what their plan looks like when it's just, 2 originators, but you got to update it when it's 10 originators, 25 originators. And it is exactly what you said. It is how you act when no one is inherently looking. Listen, some of the downside is that no one really, people ask about the risk, and I think people kind of just gloss over what the actual risk is moving from broker to banker. And one of the things that I pride our team on over here is talking about what the risk really looks like. And hey, this is what our experience. We're closing X number of transactions on a monthly basis. I see it in mass. I see it at a macro level. This is what can really lead you into trouble. And these are the things that I would be wary of trying to take on yourself. I mean, we have people that I've seen it before where people want to jump from broker to non-del to del all within like 90 days. And it's like, okay, well, let's just pace ourselves. And I think the experience that we have on our side is kind of giving you the steps to help you transition and to make that step so it is safe for you to do, so you don't ruin everything that you've built. Right? You just said that yourself. You don't want to ruin what you built. What are some of the 1 or 2 actionable things that they should do when they first want to make that move? Scott, if you could give somebody 2 pieces of advice to say, hey, you've made the decision, you're going to move from broker to banker, here are 2 things I would definitely do. Do you have anything in mind?
I think you have to have the ability to network and leverage relationships and partnerships. So you and I have met at, name all the shows, National Association of Mortgage Broker, AIM events, Brokers Are Better. We've been out to all these events, right? And what's a common denominator is there's a lot of people in the corners at lunch tables, call it the water cooler, standing around networking, right? We're collaborating. And what's happening there is we're gleaning your 25 years, my 25 years. You're bringing in some key industry leaders and people, the silver hair of the industry that has been here for 25 and 30 years, post 2008, and seeing the declines and the uprises of the CFPB and all these rules and regs. And then also understanding what's available to you now is the ability to put together, I can go ahead and subcontract my compliance. I can come up with a first funding solution for credit lines. I can come up with an LOS system that's already built and put my logo on it. I can come up with a marketing person to run my online marketing campaigns. This is not built in-house anymore where you have everybody internally going 8 to 5 into a glass building working at the same physical office space. We've created this new virtual world which allows us to leverage all kinds of providers of services that can help us accentuate our business and make it viable and run. I think it's the ability to know who the players are in the industry, who has a true voice, who has credibility. You've seen them around for years. They seem to, their message is not all over the place. They're not chasing the new hottest trends, right? And that's what financial services and our banking industry is built on. It's built on stability, and it's built on predictability and taking care of the customer.
Well, I kind of have a running joke, Scott, where I spent probably 4 or 5 years, maybe even longer, going to conferences and hearing about nothing but non-QM. Now I'm in the phase where I'm going to hear nothing but AI. So I think we moved on from, hey, we're going to have panels on non-QM to now we're going to have panels on AI constantly at every trade show. But AI is a phenomenon. I've been playing around with it quite a bit lately, so it's been very, very helpful to me. What are you noticing? What kind of trends are out there? What are you seeing out in your space? What's being brought to your desk on a regular basis right now?
We're paying attention to AI because it's such a hot topic right now, and everyone seems to utilizing it in some manner, especially as a way to get in their business, maybe resources or information that normally would be provided they'd have to pay for, whether it be at a attorney drafting their compensation agreement or policies and procedures. Maybe they need a quick remote workers policy for their staff in a certain state. So they'll submit to us a version that they've sourced online through AI and ask us to review it, or they'll send us meeting notes ahead of a consultation call based on regulatory statutes and opinions issued by AI to support what they want to address in our call. I've noticed a lot of it hasn't really been accurate to a degree that it's reliable. It's a great helpmate to help you gather information, to give you a baseline or some jumping off or talking points, but I wouldn't take it completely as a policy, a procedure, an employment agreement, an offer letter, anything like that yet. I think it's a great supplemental tool to support, but I don't think it's clearly a reliable source. And that's just because I think it's sourcing a lot of things out there that come from forums, misinformation, and you have to interpret case law and some of the findings to the actual rules and regs. You can't really take it as a black and white. We are looking at it as a company, as a helpmate to our clients that they can in turn submit advertising for review and things like that. What's available to you to source, to review, to give you an overview as far as how this is looking and developing is excellent in that regard, but not for legal documents or legal presentations to the state regulators or things like that just yet.
Yeah, I think that's a great point. I've been talking to my team about that a lot, which is one of the things that I've always struggled with is I have this idea of I want to do this, right? Whatever this is, X, Y, or Z. And then you go, well, how do I start? And that would always, the problem for me was the starting point. Like I just need someone to kind of build it out for me. And that's kind of how I've been using AI. Like, hey, AI, I want to build this. And it kind of gives me the framework, but I'm not going to trust what's inside of the framework until I vetted it quite thoroughly. And I think a lot of people, it's not a piece of paper that you just turn in and say, hey, by the way, AI did this. Now you got to make sure to review it and make sure it fits exactly what you're trying to get done. And it is accurate, 1,000%. So Scott, I'm gonna get you out of here on this. I'm a big fan of strategic compliance partners. I think you know that. I think it's a great solution for a lot of people. I think you guys provide an invaluable service. You want to just kind of touch base with really quick about how people get started with you guys?
Well, mostly our clients come from referral sources like yourself, or even from national lenders and investors. They identify a customer of theirs that has a need, a shortfall in their business model or their plans, and it's usually in the area of compliance and licensing and business structure, and they refer to us. And what we do there is we provide consulting where you meet with consultants or policies, procedures, and services related to the mortgage industry and supporting your compliance needs. What I love about strategic compliance partners is everyone here is tenured in the industry. So we've all been chief compliance officers in boardrooms, worked for large national lenders, boutique firms. We've been through the ups and downs of the subprime lending market. Many of us have worked at institutional lenders and at brokers and in all facets of the industry, whether it be licensing, back office operations, and processing. So our ability to communicate with our clients in a real world environment, like we've been there, done that, know where you're coming from, that's exactly what we were talking about earlier. Lean on the people that have been there before. If you're going through your first state audit, it's your first one in Texas. Well, to us, it maybe is the 60th or 70th one we've worked on this year, right?
Yeah.
So we would know the regulators by name. We would know what the expectations are. So leverage those relationships and opportunities you can. It's impossible now to go hire a compliance officer. They're all six-figure people to get good ones and to put that as an overhead in your business. But you can for sure get a relationship with a firm that will consult with your in-house designated compliance officer that also double duties as your payroll person, your admin, or your post-production closing person, things like that.
Fantastic. All right, Scott, thank you so much for taking the time. Really do appreciate you, and look forward to seeing you on the road here soon.
Thanks for tuning into the Non-Del Influencers podcast, powered by First Funding. For more resources and episodes, visit nondelinfluencers.com.